into a speech or a presentation on such a topic after lunch. I'll try to make it very short so we can leave more questions, hopefully have more interaction with the audience that way. I was really struggling with the title because I'm supposed to talk how to investigate the legal framework for Takaful in Egypt. And it's an easy task and a difficult task. Easy because you look at the regulatory framework and you find almost there's nothing. No Takaful specific regulations in Egypt. So in that sense, it's very easy. And the investigation is done. On the other hand, insurance companies in general, including Islamic insurance companies or Takaful companies, are subject to the same regulatory framework which is imposed on insurance companies in general, conventional insurance companies. This is the same case for Islamic financial institutions in general, banks, and any investment companies that are producing or offering Sharia-compliant products. So hopefully, with this trend in Egypt of reforming the financial regulations in general, and we've heard about new pieces of legislation being offered, presented to the Shura Council regarding Islamic financial institutions, hopefully that insurance will be next in the list to have the attention of the Egyptian legislator and provide the much needed legal framework. First, we will touch upon these few points quickly. We'll give an overview of the current insurance regulations in Egypt. We'll talk a little bit about the, as I said, the lack of Takaful specific regulations. And we will quickly maybe mention a few of the objectives, the main objectives that the legislator should be looking at when considering Takaful regulations and Islamic financial regulations in general. And finally, we will mention the differentiating features of Takaful regulations based obviously on existing models from neighboring countries have already preceded us in adopting Takaful regulations. In Egypt, as we all know, of course, you've been hearing all day about the insurance market in Egypt. It's a huge market, one of the main in the region. It is one of the oldest, if not the oldest in the region, with these numbers are actually from 2010. So the premium size is 8.8 billion and total investment size of 58 billion. We have about 30 insurance companies, 13 of which are foreign owned. The governing law in Egypt, it's one governing law, which is law number 8 of 1981. Obviously, insurance companies are supposed to be stock or joint stock companies, which are also governed by law number 159 of 1981. But the most important law for an insurance company is law number 10, which has been amended over the years to provide for much more liberal regulations, especially when it comes to foreign ownership. Egypt is one of the countries that allow, in the region, few countries in the region that allow 100% foreign ownership of insurance companies. There is no mentioning, of course, of Takaful insurance. However, there is something called cooperative insurance, which should be distinguished from Takaful insurance, but at least the concept and the basis, theoretical concept, is there embedded in the law. Hopefully we'll have a full-fledged Takaful law issued very soon that will complement law number 10. That can obviously happen by way of amending law number 8 or issuing a completely new law. I expect that it will be the former rather than the latter, i.e. that as it was suggested to reform the central bank regulations by adding a chapter for Islamic banks, we do the same thing for insurance companies by amending law number 10 and adding a chapter for Takaful companies. One of the new amendments imposed the separation between personal insurance or life insurance and property or non-life insurance. This is one of the more recent amendments which also apply obviously to Takaful companies. We also have one regulator in Egypt. We used to have a specific regulator for insurance companies, which is the Egyptian Insurance Supervisory Authority, ISA. Now, this has been replaced by a unified regulator, which is IFSA. Interestingly, IFSA has a special insurance committee headed by IFSA's vice president, which is supposed to look into the development of the insurance market, the concerns, the issues, and I wonder if this committee is going to look at the development of a Takaful legal framework soon. I think this is much needed task for them to look into and to try to lead the market to it. Lack of Takaful specific regulations, as I said, there is no regulations at the moment. This is very disappointing given the fact that Takaful has, even in Egypt, without regulations, has really proved to be the future and the trend. We could see that there is growth in Egypt from one company in 2003. Now we have 9 companies, fully Islamic insurance companies, Takaful. And this is a global trend, but even in Egypt, without regulation, it is a trend. So the industry is begging the regulator to really come to their request and demand of providing the much needed regulatory framework. The challenges that are posed by the lack of regulations, obviously, that you don't have certainty. What law does apply to the Takaful companies and the Takaful policyholders in Egypt? Obviously, we have the insurance law number 10, but then many of these policyholders have also the Sharia compliance provisions in them. That they are subject to Sharia. How is that going to be resolved if there is a conflict between Sharia and the existing law? So there is uncertainty when it comes to the applicable rules. Obviously, there is no central Sharia supervisory committee as we see in other neighboring countries like the UAE. And the reason for that is that they have a law that imposes this obligation on insurance companies, Takaful companies. The lack of Sharia compliant investment regulations. Hopefully this will be solved later this year when we have a law for Islamic banks. This has been already introduced to the dissolved parliament last year, and it will be reintroduced again to the Shura Council. As we've all heard earlier this year, there was discussion on the draft Sukuk law. We have participated in discussions and drafting parts of this law, and hopefully that will improve the challenge of investments available to the Takaful companies in Egypt so that they can invest their Takaful fund in Sharia-compliant channels. These are the objectives that any regulator, regardless of Islamic Sharia compliant or not, will have to look for. But in addition to that, a Sharia compliant regulator or legislator needs to look into the Sharia compliance aspect of the industry. Obviously, the safety and soundness, this applies to both insurance and financial institutions, regardless of whether they are Sharia compliant or not. But when it comes to the Sharia compliance, there are approaches to open the door completely for any new players to be licensed to practice Takaful, or to limit it to companies that can offer 100% fully Sharia compliant products. With respect to the Sharia supervision, the models in the neighboring countries that we have two committees, one at the central level, which is at the regulator level, in our case it would be EFSA, and one at the company or the insurance company level. Very important and crucial difference between the two models, between Takaful and conventional insurance. The policyholders are the ultimate bearers of risk when it comes to the underwritten investments. The participants share this risk and not the insurer. The operator and the policyholders are subject to, obviously, Sharia supervision. And as I said, right now we only have one level of Sharia supervision in Egypt, which is at the insurance with the Takaful company level, and not at the regulator level. The main rights of the participants is that they obviously share the profits realized from the Takaful fund. This is completely unlike the case when it comes to conventional insurance companies. They also have the right to attend the General Assembly meeting as suggested by some of the examples of the neighboring country regulations, like in the UAE. However, obviously, they don't have the right to vote because they're not shareholders. The resorting to the concept of Qard Hasan, as I said, this is a differentiating feature of Takaful. However, we need to really consider how can we enforce this particular provision from a Sharia perspective, and what if, as Brother Mr. Vasilis was saying, if the company does not foresee any return to profitability, and they would have to cover this loss for good. Is it a way to return to come back and get this money from the policyholders? Under Sharia, the company actually has this right, but contractually they waive this right, and that is a bit of a conflict between the contract and what the Sharia requires. With this, I will leave you hopefully to the question and answer. Oh, we have Ffion before the questions and answers. Thank you very much.
Many thanks, Dr. Walid. Perhaps if I may, just to clarify a point on the last slide, Dr. Walid can correct me if I'm wrong, but the shareholders do not participate in the underwriting loss of the participants pool rather than the investment loss. There is an investment aspect that is fully borne by the participants, but I believe what Dr. Lee might have meant to have said is that the underwriting loss is borne by the participants. This is where Cairo Hassan comes into play, which is repaid to the shareholders, but there's no transfer of risk to the shareholders, so there's no underwriting loss borne by the shareholders.
Absolutely. The underwritten investments are borne, the rest are borne by the policyholders.
Thank you, Dr. If I could ask Ffion to take the podium and speak on a subject very close to my heart, on the IFSB regulations on risk management.
Yes, this one, Dawood. This is actually dedicated to Dawood because I think it's something that's very, very important and something that the IFSB put out a paper on back in November 2012. Now, it's often been said that one of the main obstacles to the global growth of Takaful is the lack of standardization in regulation, and in one of the most important aspects of regulation in terms of maintaining the health and strength and success of the global Takaful industry is effective risk management. Now, as I said, a few months ago, back in November, the IFSB issued a new draft standard on risk management for Takaful undertakings, and Dawood was part of that. And the IFSB's aim was really to establish a set of minimum standards in risk management and suggest ways in which risk management strategies could be implemented in the Takaful undertaking. So what I'm going to do this afternoon is just touch on the different risks that face a Takaful operator and also highlight some of the suggestions made by the IFSB in terms of how Takaful operators can implement strategies to tackle some of those risks. So what are the risks? Well, the majority of the risks facing Takaful operators are pretty much the same as those that face conventional insurers, except that there are some specific things that are particular to Takaful undertakings. So firstly, Sharia non-compliance, that's of course a risk. The interpretation of Sharia compliance differs between scholars, and that raises the possibility that a particular product that's marketed in a number of different jurisdictions is ruled compliant in one, perhaps not compliant in another. The same is true, I guess, for investment decisions. Now, breaching Sharia standards can also have a different effect depending on the entity and the different jurisdictions. So, for example, it may invalidate contracts under Sharia law in certain circumstances, or it might remove a Takaful participant's protection, which is obviously not the aim. It could also expose the Takaful undertaking to regulatory scrutiny and reputational damage, which is obviously a very important thing to maintain. The second thing is segregation of the participant's fund. Now, the requirement to keep the participant's fund segregated from the other funds can lead to risks associated with governance and management, not least of which includes the financial implications for the shareholders' fund of having to provide solvency support to the participants' fund. Now, the third key risk that's particular to Takaful operators is re-Takaful, and that brings its own particular risks. So different methods of affecting re-Takaful contracts have developed, and Takaful operators really need to be aware of those differences. They also need to be aware of the need for transparency in how revenues and expenses under re-Takaful contracts are attributed. They must also be aware of the credit exposure to the particular re-Takaful operator in question. So in addition to those specific risks, there are also more general risks, of course, that the conventional insurers are also exposed to. The first, operational risk. Basically, that's the risk of loss resulting from inadequate or failed internal processes and systems, or from external events. Now, the key considerations as far as operational risks are concerned are, firstly, the Takaful operator's fiduciary responsibilities in relation to continued Sharia compliance and also underwriting management, the adequacy of internal processes, the ability and reliability of staff, that's something that regulators are looking more and more at, the control over outsourcers, and also the adequacy of information technology systems. And that's another thing that's being looked at quite hard by the regulators these days. And the increases in cyber risk in particular are becoming more and more evident. So moving on to underwriting risk, the key considerations from that perspective include the adequacy of underwriting standards to ensure that appropriate risks are accepted, the adequacy of mechanisms for adjustment of pricing, monitoring the renewal rates for participants and the effect of that on the solvency of the participants' fund going forward, and the adequacy of technical provisioning for claims as well. So leading on from underwriting risk is market risk, i.e. the risk of loss arising from movement in market prices. The IFSB recommends, amongst other things, that Takaful operators implement three things: an appropriate framework to manage market risk, adequate policies to govern investment strategy, and also adequate hedging strategies. Now, obviously linked to market risk, and we've also heard earlier on about credit risk, and that's also very important. the risk that a counterparty fails to meet its obligations. Now, a Takaful undertaking is exposed to this risk in three main ways. Firstly, the assets it holds in investments. Secondly, under re-Takaful arrangements, and also to the participants themselves. Now, the IFSB stressed the importance of credit risks being properly measured and quantified and also monitored. So turning next to liquidity risk, this is the risk of loss to a Takaful undertaking arising from its inability to meet its obligations as they fall due. The IFSB recommends creating and implementing policies to deal with liquidity issues, such as the drawdown of a card facility, while discouraging the use of the participants' fund to provide liquidity to support the shareholders' fund, which is obviously not the intention. Now, the risk that I mostly come across is legal and compliance risk, i.e. the risk relating to the legal and regulatory implications arising from Takaful operators' operational activities. An important consideration in that context is firstly ensuring that the Takaful operator carries out its duties ethically and in accordance with local laws and regulations, dealing appropriately with any conflicts of interest, and also establishing procedures for detecting and dealing with financial crime. Again, that's something that's very much on the increase and something that all entities, conventional insurers as well as Takaful operators, are continually exposed to.
The working group will be on the 29th of April to consider the comments. So you've really got time to reply to IFSB direct. You can look it up on the website, along with corporate governance and solvency, two sets of documents released over the last few years. And pass your comments on risk management, as explained by Ffion there, to the IFSB and the comments you may have before the meeting on the 29th of April, where the working group will consider the public comments made in the three meetings or to come in by.
Obviously, the idea is to promote the strength of the industry, and risk management is obviously a very, very key pillar towards achieving that. So that's all I want to say. Thank you very much.
Thank you. We've had three excellent presentations. Some is on the perspective of a rating company, Dr. Walid, on developing Takaful for a regulatory perspective in Egypt, and Ffion from the IFSB's work on risk management on behalf of the industry. What I'd like to do now is first open up to the floor on any questions on any of the comments made in the presentation. So are there any questions from the floor first of all? Yes, Iqbal, could we have a microphone over here, please?
Thank you for your excellent forensic diagnosis of the Takaful balance sheet. But I see that you have, of course, concentrated only on the GCC area particularly. Would the Malaysian situation be similar, or have they got better handle on the thing?
Okay. I have to say I'm not exactly up to speed with where Malaysia is, but I had been working together with Dawood on one of the IFSB projects, and I could see where Malaysia was at that point and what it was developing. I would say Malaysia is one of the better regulated Takaful companies. Certainly it's the better regulated of the Takaful companies, the best regulated of the Takaful countries that I know industries. And the reason I say that is because it provides certain features. First of all, it has specific Takaful regulation. So that is very important. Secondly, it has a risk-based model which applies to the Takaful companies. That's very important so that we ensure that there is enough capital for the policy companies. The third thing is they have, as far as I know, said that in case of insolvency, it's their regulation that prevails over Sharia law. And that provides clarity. It may not please everyone, but it provides clarity as to what happens. And the final point is there is a clear seniority of policyholder liabilities over other liabilities. So for these key points, I would say it's far ahead of other regulators.
Yes, we have a question over here. We have the microphone and the door here. If I may take this one first.
Hello. My comment to my dear colleague, England lady. In the beginning, I'm very glad to meet you, and thank you very much for your positive presentation. I think there are more difference between strategies, policies, Takaful in Egypt, and strategies, policies, Takaful in England. I want some explanations about this difference. This side. Other side, what is the economic benefit for Takaful to organizations, agencies, and governments? Thank you very much.
I'm not sure, was that a question or a statement?
You want my question?
If you have your statement is more than welcome, thank you. But is there a question or a statement?
My question, I hope some explanations about Takaful strategy in Egypt and Takaful strategy and the policies in England. This side, other side, what is the difference? What is the economic benefit to Takaful for organizations, agencies, and governments? Thank you.
Technology always gets me. Okay. In terms of the similarities, I don't know terribly much about regulation of Takaful in Egypt, but obviously your presentation was very helpful in that respect. But in terms of the similarities, there is no specific Takaful regulatory framework in England. English law, under English law, what tends to happen is that the Takaful operators will fit into the conventional insurance laws and regulations. That's how it's been structured to date. In terms of the Takaful industry in London, it's in its infancy, I think it's fair to say. There was a Takaful syndicate a few years ago now, probably 6 or 7 years ago, that started, but it didn't really get going, as it were. It wasn't to do with that particular business model, but other factors. But that stopped. We had another motor Takaful business in the UK that I think that was probably in 2009 that it was launched. Principal Insurance, but that particular business model didn't quite work in England either. But there are certainly moves to develop Takaful on a more commercial scale in terms of commercial lines of business in England, and I think we'll probably see something in the next, I'd say, 12 months or so in that respect. So certainly as far as England is concerned, there's no specific regulations, but there is a big push to develop Takaful in the UK. Because there's a push by the government in particular to make London a centre of Islamic finance, and obviously Takaful is welcome as the insurance part of that.
Well, really, the similarity in the strategy, given that both England and Egypt do not have a regulatory framework, I would believe that the strategy should be very similar, that you want to develop the capital market. So the first thing you want to do is to build the legal infrastructure for it. So in that sense, they really have to have this objective in common. Egypt is in the middle of the Middle East, and it is a country that attracts investments, Sharia compliant and non-Sharia compliant investments from the region. You would expect that by adding this alternative and bringing the capital to the market in Egypt, that you will be able to attract more investments in this sector from the Gulf and from neighboring countries. So I think they both have a lot of similarities, given that they don't have an existing legal framework.
Thank you. We had a question here. We could have the raise your hand, please. Yes, microphone here. Thank you.
Assalamu alaikum. My question goes to Ffion. You spoke about market risk. I'm looking at it vis-a-vis Takaful. Market risk, I think, in my own understanding, has to do with investment that relates to stocks. And Takaful, basically, fund from Takaful product is not invested in stocks. So how does market risk affect Takaful? That's my question.
Well, in terms of the investment side, Takaful operators will invest in Sharia-compliant investments, and so to that extent, they're exposed to the how well those investments do and how well they don't do. I think one particular issue is that because the Islamic finance market has grown to a certain extent, but perhaps isn't as large as the conventional insurance market, we do have a concentration of risks in particular investments. I don't know if you want to answer that as well.
I can add that based on an analysis we ran last year, 40% of the assets invested by Takaful companies is actually on equities, with another 30 to 40% on real estate. Now, and not to mention, market risk covers everything to do with your investment that is likely to be traded. So, specifically for Takaful company, as Ffion said, and apart from equities, you have the additional risk of concentration of your investments, because in some markets there are not that many vehicles to invest, so you end up concentrating quite a lot of your investment on specific instruments. So absolutely it applies to Takaful companies. I would say probably it is one of the highest consumers of capital that we have seen in Takaful companies.
I have a question with the lady over here. Thank you. You have the microphone to the lady, please. Thank you.
There.
Thank you very much. I was about to think that I'm invisible. I would like to pose a question. What are the risks of the capital companies investing their portfolios in sukuk as opposed to those investing their portfolios in equities?
Yes, there is a risk. Typically, if you look at sukuk investments, you need to look at what counterparty you're taking. And the average sukuk has less risk than the average equity. Yeah? Having said that, you need to be careful that when you do take into on your balance sheet, Takaful company takes on their balance sheet sukuk investments, they don't concentrate too much. So to give you an idea, if you were, based on our model, if you were invested on equities, you would need roughly 15% of that value in capital to back it up. If you were invested on sukuk, you would roughly need about 5 to 6%. Yeah? However, if you are investing all your assets on one sukuk or two, then that's the issue, because then your investment strategy becomes very much 1 or 0. Yeah? So it is, broadly speaking, more secure than equities, but we need to be able to manage the concentration risk.
Thank you.
We have 2 minutes remaining. I always feel the success of the panel today is the Q&A session, and I'm very pleased with all of the questions that have come from the audience without me having to fall back to any of the prepared questions. Do we have one more question from the... Yes, we do. Very good. The microphone over here, please. Thank you. This will be our final question for the panel as well.
Question about risk management for Takaful. Besides the market risk, what is the difference between the risk management process between the conventional and Takaful?
Ffion, if I could perhaps start with you, and I'll go down each of the panel members on this question.
Sure. I think that the main difference is probably Sharia compliance, because obviously that's the one of the main distinguishing features between Takaful and conventional insurance. So you'll have to have your Sharia supervisory board in place, and it's the trouble, I guess, to date, or not the trouble, but one of the challenges that we've had to date is having a standard set of Sharia interpretation of different policies and products, and on the investment side as well. So that's what I was saying about potentially a product being okay in one jurisdiction and not okay in another jurisdiction. Whereas under conventional insurance, you don't get that added layer, I guess, of regulation. So that's probably for me the main differences in terms of risk management.
Yeah, I think in addition, obviously, to Sharia compliance risk that's added with respect to Takaful, I think the diversification of the investments of the Takaful fund itself might be a bit more challenging within the Takaful context as opposed to conventional insurance company.
Well, I agree with everything that's been said before. I would add one more thing, and that's reporting lines and independence of the board. Because in Takaful insurance, you have this particularity of the policyholders fund being barred and slightly separate. So you need to ensure that whoever reports to people who are not exclusively there to protect shareholders' rights. So you need to have sufficient independent directors on the board, and your person responsible for risk management needs to report to that board.
I'd like to take the opportunity now to thank the 3 panel members for excellent and diverse presentations, and to thank you, the delegates, for an excellent Q&A session. And with that, I'll bring the panel to an end with a round of applause from you all for yourselves